Hey, listeners, are you ready to take control of your car buying experience and make smart financial decisions? Introducing the Ultimate Auto Finance Guide, your go to resource for navigating the complex world of auto finance. Whether you're a first time buyer or looking to refinance, this guide has all the tips, tricks, and insider knowledge you need to secure the best deal. Don't miss out on this opportunity to empower yourself and drive away with confidence. Head over to www.ultimateautofinanceguide.com now and grab your digital copy. Trust me, it's the smartest investment you'll make before buying your next car. Welcome back to Drive to Success, Mastering Auto Finance. I'm your host, John Lewis. In today's episode, we're diving into one of the hottest yet most complex trends in the automotive industry, the dealership buy-sell boom. With over $100 billion in play, record-breaking transaction volumes, and something called blue sky valuations driving premium prices, auto dealers across the country are cashing out and some are being forced out. So whether you're a dealership principal, a credit analyst, or someone curious about the massive changes happening behind the scenes in the auto retail, this episode is for you. Let's jump in. The U.S. auto dealership market has undergone its most significant transformation in decades. While 2024 was a record-breaking year with 510 rooftops changing hands, making it the fourth busiest year for auto retail M&A, 2025 has brought dramatic shifts. Q1 marked the slowest quarter for dealership buy-sell activity in a decade, with publicly traded consolidators nearly halting acquisitions, investing just $174 million. That's a staggering 91% decline. However, Q2 showed signs of recovery, with global M&A transaction values increasing by 5% compared to Q1, despite new vehicle sales growing only modestly by 2.3% year over year. The market dynamics have shifted significantly. Inventories climbed to 2.8 million units by June's end, and the seasonally adjusted annual rate dropped to 16.1 million units from Q1's 16.4 million. Why is this happening? Because consolidation isn't just the name of the game anymore, it's becoming a survival strategy. Larger dealer groups are expanding aggressively through acquisitions driven by economies of scale, tech investments, and the need for future proof operations. Meanwhile, family owned dealers are looking for a graceful exit, often driven by succession planning, operational pressures, or shifting market dynamics. Now, before we dive into why dealers are selling, I need to explain something critical to understanding dealership valuations, the concept of blue sky value. If you've been in the automotive industry, you've likely heard this term, but let me break it down clearly. Blue sky value refers to the intangible or goodwill value of an automobile dealership beyond the tangible book value of its hard assets. Think of it as the premium someone will pay for everything you can't physically touch but that drives your business. What's included in the blue sky value? There are five key things. First, franchise rights, the value of holding that specific manufacturer's franchise. Second, goodwill, customer loyalty, your reputation, and established relationships. Three, location premium, the value derived from your prime real estate positioning. Four, operational excellence, your systems, processes, and management capabilities. And five, future income potential, expected cash flows and growth prospects. Blue sky value is typically measured as a multiple of pre-tax earnings, which we refer to as the blue sky multiple. This is where dealers can really maximize their exit value because while your inventory and equipment have standard values, your blue sky multiple can vary dramatically based on how well you've built these intangible assets. So, what's pushing this unprecedented sell off? Succession planning remains a significant driver. Many owners are aging, and the next generation isn't always eager to take over a business facing so much uncertainty. Economic disruption from the 25% vehicle tariffs that took effect on April 3rd of this year is already impacting the market, with analysts projecting a 2 million car annual drop in demand. However, there's a significant development. A federal appeals court ruled that the president exceeded his authority in implementing these tariffs, though they remain in effect until October 14th of this year, while the government appeals to the Supreme Court. This legal uncertainty is creating additional volatility for dealers trying to plan their exit strategies. Some are rushing to sell before potential tariff relief, while others are waiting to see if the policy changes could boost their blue sky valuations. EV costs continue to be a significant factor. We're talking high power infrastructure, grid upgrades, and technician training. For many dealers, the six-figure investment doesn't make sense, especially when their blue sky multiple might not capture the full value of that investment. OEM facility requirements are becoming increasingly stringent by the year, with some image programs accruing millions of dollars in upgrades to remain compliant. When considering such a significant capital outlay, selling at today's high blue sky multiples becomes increasingly attractive. Market timing is perhaps the most significant factor. With 16% more dealers looking to grow and aggressive buyer interest, this might be the peak window for maximizing blue sky value. Smart dealers are asking themselves, will my blue sky multiple ever be higher than it ever is right now? Selling a dealership isn't like selling a house. It takes 12 to 18 months, often longer, and the process has become increasingly sophisticated. Here's the high level roadmap. First, preparation and blue sky valuation, understanding not just what your store is worth, but specifically how your blue sky value stacks up in the current market. Second, assembling a specialized team, brokers, lawyers, CPAs, and franchise law specialists who understand blue sky valuation methodology. Third, due diligence, clean financials, inventory records, tax returns, but also documenting all those intangible value drivers that support your blue sky multiple. Fourth, finding qualified buyers, dealer groups, private equity, or entrepreneurs who understand and can pay for blue sky value. Number five, negotiation and OEM approval. Most manufacturers must sign off on ownership transfers, and they're increasingly scrutinizing the financial capability of buyers. And last, closing and transition, aligning financing, real estate, and operations to ensure continuity and protect that blue sky value during the handoff. The surge in transaction volume has elevated several power players who are making these complex deals happen. Tim Lamb Group, Kerrigan Advisors, and Hague Partners continue to lead in brokering with deep expertise in blue sky valuation across different franchise brands. The David Canton Group and Pinnacle M&A offer comprehensive advisory services enabling sellers to understand and maximize their blue sky value before entering the market. And Stevens Investment Bank and Brady Ware Dealership Advisors provide support with capital, strategy, and financial planning, which is particularly important as blue sky multiples require sophisticated financing structures. These firms have become experts at identifying the factors that drive blue sky multiples and help both buyers and sellers navigate the increasingly complex valuation landscape. Let's discuss the forces that are currently impacting blue sky valuations. First, tariffs. While the market has shown to be surprisingly resilient, the threat of higher prices and reduced inventory could compress blue sky multiples for dealers in vulnerable markets or with import heavy brand mixes. Then you have EV infrastructure requirements, which are no longer just about compliance, they're becoming a competitive differentiator. Dealers who've invested in EV readiness are seeing higher blue sky multiples, while those who haven't are seeing discounted valuations. And last, direct to consumer trends from OEMs like Tesla are forcing a fundamental question. What is the long term value of traditional franchise rights? This uncertainty is creating a bifurcated market where strong franchise relationships command premium blue sky multiples while weaker ones are discounted. If you're contemplating a sale, understanding blue sky valuation isn't optional. It's the difference between a good deal and a great one. Blue sky multiples have remained stable despite profit pressures, but this may not last forever. The combination of strong buyer demand and limited quality inventory are keeping multiples elevated. However, economic headwinds could alter that equation. Not all franchises command the same blue sky multiples. Premium brands with strong market positions and dealer friendly policies command the highest multiples, while mass market brands or those with uncertain futures are seeing compressed valuations. Since blue sky multiples are tied to pre tax earnings, the company focuses on maximizing profitability before going to market. This involves optimizing fixed operations, enhancing F&I performance, and consistently demonstrating operational excellence. And then last, you can consider your blue sky value by investing in OEM compliant facilities, build strong customer retention programs, develop digital capabilities, and maintain excellent relationships with manufacturers. These investments should pay for themselves in higher blue sky multiples. Looking to the road ahead, there are several trends that will continue to shape blue sky valuations. Continued consolidation with 16% more dealers looking to grow. The buyer pool remains strong, supporting blue sky multiples. Digital transformation. Tech-savvy operations are fetching premium blue sky valuations as buyers recognize the competitive edge. EV readiness is becoming a binary factor. Dealers prepared for the electric future are seeing blue sky premiums, while those who aren't are facing discounts. Operational diversification. Dealers with strong fixed operations, parts, and F&I performance are commanding higher blue sky multiples than those who depend primarily on vehicle sales. Valuation models are becoming increasingly sophisticated, rewarding diversified income streams, operational efficiency, and strategic positioning. Whether you're looking to exit or expand, the current dealership market offers massive opportunities, but only for those who understand the game, the critical role of blue sky valuation. If you're a credit analyst, now's the time to sharpen your skills in blue sky valuation methodology, as understanding how intangible assets drive dealership values are crucial in ways that traditional asset-based valuations often overlook. If you're a dealer contemplating a sale, don't just look at your balance sheet. Focus on building and documenting the intangible value that drives blue sky multiples. Start planning early, even if you don't intend to sell for another 5 years, because blue sky value doesn't build overnight. And if you're looking to buy, understand that you're not just purchasing inventory and real estate, you're paying for franchise rights, customer relationships, market position, and future earnings potential. Ensure that your blue sky multiple accurately reflects the actual value of what you're acquiring. Thanks for tuning in to Drive to Success Mastering Auto Finance. If you enjoyed this in-depth episode of Blue Sky Valuation, please share it with someone in the auto industry who needs to understand these dynamics. And don't forget to subscribe and never miss the insights that could shape your future in the auto finance industry. Until next time, keep driving towards success, and remember that in today's market, understanding blue sky value isn't just important, it's everything.
Rolling down the avenue to a jazzy beat, following that rhythm, life's a one-way street. Chasing dreams with passion, every mile's a goal. In the world of finance, stories to be told. Catching the horizon with a soulful groove. Navigating numbers, got nothing to lose. Every calculation, every deal we sway. In the realm of autos, we find our way. Drive to success, we're mastering the journey smooth with wisdom divine. Hit the keys of knowledge, let the insight play. From leases to purchases, every savvy way. Revving up those engines, zeros turn to ones. In the studio of life like morning sun. Feel the soul, embrace the jazz. In the auto world, let's razzmatazz. Financial gears shifting smooth and slick. In the podcast lane, we find the tricks. Cruising through the jargon, ain't no mystery. Unlocking all the secrets in auto history. Low ones and rates, they glisten like the stars. Drive the distance, no matter how far.
Thanks for sticking around until the end. Before we go, if you're in the market for a new or used car or even thinking about it, you must check out Drive to Success, the ultimate auto finance guide. It's packed with strategies to help you navigate the tricky world of auto financing, avoid costly mistakes, and get the best deal possible. Head over to Amazon and grab your copy today. Just search for Drive to Success, the ultimate auto finance guide, or use the link in our show notes. Take control of your car buying experience and drive away with confidence.